Good afternoon, ladies and gentlemen. The time is 3:15, and I think at this point, with this 200 points, I can assume that it's going to end worthless. There's another 20 paisa that my position will give up, and intense day. First weekly expiry of the financial year, and intense, right? It was tricky. I got like see the thing is it comes down to stop loss placement. I got stopped out at the highest point on the call options because I was very adamant on 17800 holding, but literally I managed to hold the 17800 call short. Still they were just about 15 points out of the money, but after that the threat on them was way too high. My stop loss hit. I had to exit at the day's high, and then I had no call credit. And then from there, we had this onslaught of a down move, from there making 150 plus points down move. Today was a day where, first of all, before I get into my trade, you have to understand in the morning, we opened at 17,750, right, which is a gap down. And there was quite a big sell off last night in US markets. But we opened moderately gap down. And the first thing that became very apparent here is that if you see my tweet in the morning, the pricing of risk was much more to the upside than to the downside. So the bias in the market was that 17,700 most likely to end worthless, the put option. And so anyway, my idea was, look, I'm basically on break. I don't want to really, take too many big trades. Just want to be a relaxed trade on a Thursday, because it's the Thursday I'm going to trade. So let's keep it relaxed. But I just want to show you something. So this 17,750 call option, right? From its day low to day high. So over here, from the day low that it had made around 10 rupees, 9 rupees was its day low. Okay, it made a high of 50 rupees. So it went 5 times. After that, the 17,750 put option, for example, over here, from the day low that it made around 15 rupees, it is now closing at 115 rupees. So it has been a day where you opened gap down, then you broke the day's high, you went into yesterday's range, then you came back down, you broke the day's low, and have had a runoff down move from there. So the market has literally moved in both directions. So anyway, let me get into the trade. My idea here is, look, the day I want, today is a Thursday, so I'll trade, and I'm targeting around 25 to 30 points as the best case scenario. And there was such low premiums when we opened the 17,700 and the 17,750 straddles. They were trading for around 85 rupees, right? So 85 rupees was the range that the entire day was pricing in. And my entry position was this. I entered by shorting the 17,600 put option, 100 points on the downside, 120 roughly. And I shorted the 17,850 call option, which once again is 130 points on the upside. So 250 points. And into the down move, we had an initial down move here. I moved down, especially when we broke this day's low, right? So when I moved down half of my, 1/3 of my calls. Then I moved down all of my calls to 17,800. So I'm strangling a 200 point range. And this is where I moved on. And I have roughly, this has about 8 rupees, 7 rupees, 15 rupees is there. And the pricing of volatility is so low. And at the money straddle is now starting to trade at like 70 rupees and falling down into the 65 range, that you're really not expecting too much of a move. Okay, then we come back into this range, and then we go ahead and we break the day's high. At this point, I'm thinking, look, there is tremendous amount of calls shorted at 17,800, almost 1.3 crores. So into this up move, as we broke the day's high, I just moved my put option from 17,600 to 17,650 first, and then to 17,700. So you can see I managed that up move by moving my put options up. Oh no, wait, into the down move, I further moved down my call options initially to 17,750, got stopped out on this at 18. So first stop was on this at 18. Once I got stopped out, just moved the position back to 17,800. Then my idea was, okay, let me move up my put option. Moved it first to 17,650, then moved it to 17,700. And now my idea is, this is trading at 15, around 18 is my stop loss on this. 18 and 19, the exit price that I got. So this went back down, but then once again it went up, and I got stopped out on this. So then I squared off my 17,800 call short. You can see it's trading at around 18.5. I squared it off at 19 rupees, 19.5 like that, and moved it up even further. As soon as I did that, the put 17,700 put, it expanded till about 10, which is where my stop loss was. Exited that as well. 8.5 was supposed to be my stop loss, exited it at 10, moved it down. Then this 17,650 put option there as well, had to take a stop loss, moved down to 17,600. I exited this put option at around ridiculous price. From there, again got stopped out on the put option. 17,600 expanded over 10 rupees, moved it to 17,550. At the same time, also moved down my call. So here and here, moved down my call to 17,800 and 17,750. So I'm basically just following the market and trying to keep my premiums relatively equal. Here, I basically just gave up. My idea is, look, I'm either going to like book this position at minimum 5 points profit, or like, yeah, that's about or just take a stop loss at 5 points or try to get what I can. Into the last part, I just didn't take any risk. The last 1.5 hour didn't do anything to my position, just held it exactly as is all the way till close. Not much to go. Basically took a neutral position, had to adjust for downside by moving down my calls. Then into the up move, days high breaking, had to move my puts up and move my calls away, give up credit there. And then the third move, which is then into the down move, take multiple stops on put options and keep rolling down call options. So it was really not a day for me to expect to make money. So the idea is that, okay, anything better than break even is good enough, because you really can't do much. You had literally no premium. You then make a down move of 80 points, and then you make 150 point up move, then you make bigger down move than that. It's just not priced in. I think the smarter move would have been to book profits early, but in a way you're also testing the market's positioning. When market is saying that, look, there's not going to be much volatility today, you're trying to position around that. Yeah, no additional risk towards the end, and yeah, that's it. That's the end of the day. I hope you had a good trading day. Today was annoying. Like, you went long at day high break, you would have got stopped there. You went short at day low break there also, unless you managed to hold through some steep pullbacks. Would have been a difficult day to trade. So thank you so much for watching, and I hope you had a good expiry. I will catch you whenever I'm trading next. Take care. Bye bye.